What are the different kinds of markets for forward trading? There are different kinds of markets such as stocks, futures, options, currencies, commodities, etc. In this chapter, we'll explore the various markets for forward trading, including stocks, futures, options, currencies, and commodities. Understanding these markets is essential for diversifying portfolios and managing risk effectively. We'll also discuss how participants can actively engage in these markets to capitalize on trading opportunities. Stock market. In the stock market, you can buy and sell shares of publicly traded companies. In the stock market, investors have the opportunity to trade shares of publicly listed companies. It serves as a platform for buying and selling ownership stakes in these companies, allowing investors to participate in their growth and performance. Understanding stock market dynamics is crucial for making informed investment decisions and achieving financial goals. Mutual fund. Mutual funds pool money from multiple investors to invest in various securities, managed by a fund manager. Mutual funds provide a convenient way for investors to pool their money together, which is then invested in a diversified portfolio of securities. These funds are managed by professional fund managers who make investment decisions based on the fund's objectives and strategy. Investing in mutual funds allows individuals to access a diversified portfolio with relatively low investment amounts, making it suitable for investors with varying risk tolerances and investment goals. Futures market. In the futures market, traders buy or sell contracts to speculate on the future price of commodities or financial instruments. In the futures market, participants trade standardized contracts to buy or sell commodities or financial instruments at a predetermined price and date in the future. These contracts are used for hedging or speculation purposes, allowing traders to profit from price movements without owning the underlying asset. Futures trading involves leveraging and requires a good understanding of market dynamics and risk management techniques. Options trading. Options trading allows investors to buy or sell options contracts based on their market outlook, providing flexibility and risk management strategies in financial markets. Options trading involves the buying and selling of contracts that give the holder the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specified time frame. It offers traders the opportunity to speculate on price movements and manage risk in the financial markets. What is fixed income investments? These include various investment opportunities where you can grow your wealth, such as bonds, certificates of deposit, and treasury securities. Fixed income investments encompass various financial instruments such as bonds, certificates of deposit, and treasury securities that offer investors a fixed return over a set period. These investments are favored by risk-averse individuals seeking predictable income streams and capital preservation. Forex exchange market. In the Forex exchange market, investors trade currencies against each other, capitalizing on exchange rate fluctuations to make profits. In the Forex exchange market, currencies are traded against each other, allowing investors to profit from fluctuations in exchange rates. It's the largest and most liquid financial market globally, offering round-the-clock trading opportunities across different time zones. Traders can engage in currency pairs, speculating on the strength or weakness of one currency relative to another.